Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we will take a look at the Great British Pound. On the euro currency we have prepared analysis last week, so I think that it should be sufficient. So we have discussed all necessary points and just need to wait when reaction down start to develop. Probably you should get already the short position according to our discussion on Friday and Thursday. Since we haven't taken a look at the Great British Pound for the 2 weeks, now it makes sense to update our view. On the long-term perspective, nothing has changed, so we still expect this bearish continuation, bearish trend. Its minimum target on the monthly chart stands at 145 area. Its previous lows, this area. But of course, the action to the downside will not be straight. Probably will be 2 steps forward, 1 step back, so with the retracement bounces and so on. That's why we will move to this target just step by step gradually. And on the next week, we probably should focus first on the previous lows. It's around 150 area. So if you remember our last discussion, we said we have taken the bet on this drop, and this really has happened because that was the big disappointment on the market when the Bank of England has released the dovish comments on the possible rate hiking. That was absolutely opposite to the expectation on the markets, and that's why Great British Pound has dropped miserably. But at the same time, at the moment that it is dropping, it has reached significant support area. So it has completed this butterfly 127 extension target, it has reached the fib level, and take a look, daily oversold. That's why we currently suggested that some retracement should follow. And it indeed has happened. But the problem with this retracement was that it was a bit, the shape of this retracement hasn't quite formed any clear patterns that could suggest us the depth of this retracement, how far it could be. And this riddle has been resolved mostly on Friday, only yesterday. Initially, we have suggested that probably it will be better if market will stop somewhere around the lower border of this big triangle, because deep retracement inside of this triangle will not be really good for a bearish perspective. But this action inside of this triangle doesn't look dramatical right now, especially if you will see why this action really has happened on the intraday charts. On Friday, market has formed this drop downward candle that in fact engulfs the range of the previous 3 sessions. Unfortunately, this is not the reversal candle. So if it will be a reversal candle, it will be just perfect. A reversal candle is the one that creates the new top but close below the bottom of the previous trading session. Something just to show you. Something of that sort. Market creates the new top but close below the lows of this candle. In this case, it will be a reversal. But here, we see that market has dropped significantly, but hasn't created the new top. But still, even despite this fact that this is not reversal candle, this drop in general also looks very impressive and could mean that the upward retracement is over. Taking into consideration the pace of this drop and the acceleration right to the 127 target, it makes us think that the next destination point will be the 1618. That will be probably our next target, so somewhere around 4850 or 1618 extension. Also, as you can see, the daily oversold also lets market to reach it. So market will not be oversold till this moment. Now, on the 4-hour time frame chart, we see just the perfect picture of the retracement, and just unfortunately, we have recognized it a bit late. Mostly on Friday, I have posted this chart on our forum. But if the thing that is done late is better than it's done nothing, never. So that's why this is really very nice picture. I will explain why. Because take a look, market has reached the weekly pivot resistance one, and that was also the 618 resistance area. Since the weekly pivot resistance one has stopped the upward action, the bearish trend is still valid, because we know that the weekly pivot resistance one should hold upward retracements. And if retracement wasn't able to exceed the pivot resistance one, it tells us that we still stand in the long-term bear trend. Other words speaking, this stop here has confirmed existing of the bear trend. Second moment is that the market has finalized this upward action by just perfect pattern. So you can see perfect reversal butterfly has been formed. It's 1618 extension here. So that was the reason why market has shown this spike up and has reached some deeper retracement area. Initially, we think that here is a reversal down, but then market has taken another leg up, mostly based on the bullish pattern, bullish financial data that has been released on the United States. But right now, we see that market has shown very fast drop. The signs of the acceleration, the signs of thrust here exist. That's why it could be really the sign that upward retracement is over. This is reestablishing of the bearish trend down. You can see that market has dropped right to the weekly pivot point. These pivots, guys, is the pivots of the last week. This is not the pivots on the common week. So as you can see, the general picture that market has been formed here with this upward retracement looks really perfect. That's why, guys, on the hourly chart, we will be watching for this area. It's 152.25, 152.40. It's resistance. Because this will be weekly pivot point on the common week, Fib level. And take a look, that's natural support resistance that was held in market for a long period. As you can see, this is multiple attempts to pass through it, failure, again attempts to pass through it, was breakout, support. Now it was support again, but market has passed through the broken area down. And on the way up, market could retest this area again. That's why the first level that we were watching for, it looks suitable for this purpose. It's 152.25, the weekly pivot point, and 52.40 is the Fib level resistance. Upward retracement probably should not be too deep, because market just has reestablished move down, and it's not time yet for a deep retracement. And market is not ever sold. So that's why the no necessity for a deep retracement right now exists. That's why 3.8 minor retracement will be sufficient for the market. And that's the level that we'll be watching for in the beginning of the next week.